Hi all, I'm Dhananjay, uh, I'm owner of the StockBox news channel. Hope you enjoyed the videos that we have posted so far. We have just posted all the presentation, investor presentation and AGM presentation and various other investors presentation published by all Indian companies. That's a public information. We have just converted those presentation into videos so that people can watch it visually with a musical background and understand about the companies that are listed in the stock exchange. This would give a fair amount of idea about the company and its financial performance and its future plan. So that's the basic idea about on posting all this presentation in video forms. In addition to those presentations, we today we are going to present the financial performance of all the Indian companies that are listed in stock exchanges in India. So as a part of that activity, we are today we are coming out with the first episode in this series called Top and Bottom Line series. This is basically the financial informations uh, declared by the companies that are listed in the stock exchange, as I told you before. Now, what is top and bottom line in financial reports that are published by these companies? Here, the top line, we mean the total revenue earned by the company plus other incomes that are earned by the company in quarter one. That is from 1st April 2024 to 31st March 2024. Comparing this result with that of the Q1 April 1st, 2023 to 30th June 2023. So we are just comparing it and see whether they have performed well or not. So by bottom line, I forgot to tell you what is bottom line. Bottom line is nothing but the net profit after tax, which includes share from associate companies and joint venture companies. But before giving out the shares to the minority shareholders in the subsidiary companies, if the company is having subsidiary, holding and subsidiary companies. That's called consolidated financial statement. In that, we have not excluded the minority share. So it is before the minority share. So this is the top and bottom line that we describe here. So what is the total universe of this uh, Indian market? So let's see how many companies are declared results and how many companies are a big company or a mid company or a small company, which is worth reviewing for stock investment. So the total companies in Bombay Stock Exchange that declared Q1 result, that is Q1 ending 30th June 2024 result, as on 31st August 2024 is 4,535 companies. So these many companies have declared their Q1 results. And in that 4,535 companies, the companies which have a minimum market capitalization of 500 crores or 5,000 million as of 30th August 2024 closing price is somewhere around 1,663 companies. And we are going to concentrate only on this 1,663 companies. So what we did in the last few days is we have collected the financial informations, mainly the top line and the bottom line of these 1,663 companies, and we have recorded it and calculated the total revenue, that is total top line, which is the total income plus other income of all these 1,663 companies. Also, their net income, that is profit after tax of all these 1,663 companies. And we have compared this with the previous year's Q1 quarter and see whether this revenue have grown, whether this profit have grown, whether the margin have improved. So these are the various aspects that we have broadly reviewed in these results. And one more information is the total market capitalization of this 4,535 companies is somewhere around 461.5 trillion rupees. When we convert this into dollars at the rate of 84 per dollar, which is trading around 84 per dollar, is somewhere around US dollar 5.5 trillion. 5.5 trillion is the total market capitalization of all these 4,535 companies. So this is the total size of the Indian market in terms of dollars, which is $5.5 trillion. So if we compare the top two companies that are listed in US market, in US stock market, namely Apple and Microsoft, the total value of these two companies are exceeding this 5.5 trillion US dollar. So that is the size of the Indian market. Size of the Indian market is less than the size of the top two US stocks. That's the ultimate conclusion. Okay. Now let's go to the next set of information. We have collected this top and bottom line of these 1,663 companies, as I told you before, in this format. See, we have collected all the companies. That is, the issuer name is the company. And Q1, June 2024, total income when compared to June 2023, quarter one, and the respective growth, growth rate in the top line, and the net income, that is profit after tax, compared to Q1 2024 to Q1 2023. Okay, and their growth rate. And we have calculated the total market cap, which is nothing but the outstanding shares into the current market price. If we add all those things, it comes to somewhere around, 445.9976,012 million rupees, which is somewhere around 5.2 or 5.4 trillion US dollar. Okay, and let's see the next slide, which is the summation of the overall market pricing. See, here we have declared this as we have printed this as an overall valuation, but there is always a difference between the value and the price. Value is decided by the fundamentals of the company, of its business, namely their revenue, earning, and the profit which is resulted, which is coming out of that total revenue, and the assets and the liabilities which they own, and the maintenance, the consistency of growing this revenue and maintaining the margin over a period of time. So value of a business is decided by these fundamentals, whereas the price is decided by the market players in the stock exchange, between the willing buyer and the willing seller. That is called pricing. So the price is what you see in the market, which is the listed price, whereas the value of the business depends upon the financial performance of the company. So both are a different term. Once in a while, or rarely, it coincides. The price of the company, which is listed in the stock exchange, rarely converge with the value of the business, underlying business of that company. Here, the overall pricing in that way is somewhere around the market capitalization of all these companies is 5.476 trillion US dollar. This is rupees and this is dollars. Let's see one by one. What is the total income of these 1,663 companies, which is around 0.52 trillion. In terms of rupees, it's 4,38,767 crores in Q1 2024. That is 30th June 2024. The same thing was 4,1,506 lakh crores. That is crores. Okay, this converts to 0.476 trillion. So the revenue, the top line have grown by 9.65% in Q1 June 2024 when compared to the same period in previous year. Whereas the net income, that is profit after tax, that is the bottom line of these 1,663 companies, have grown by 5.37%. And the growth rate, top line growth rate is 9.65. The bottom line growth rate is 5.37. So there should be some drop in the margin. What is the drop in the net income margin? That is profit after tax margin. Margin is nothing but how much is the profit that you make out of 1 rupee. If you're making only 10 paise, it is 10% out of 1 rupee sales. So here in Q1 June 2024, for every 1 rupee, the company have earned that earned a profit of 8.89 rupees. This is 8.89 rupees. Whereas in the same period last year, last financial year, it was 9.25 rupees. So there was a drop in the net income margin from 9.25 to 8.89. It has gone down. The margin has come down by 0.4% or exactly 0.36%. So this is a bad sign. Some companies have declared reduction in their net income margin, which has resulted in overall reduction of 0.4%. So Q1, in terms of bottom line, they have not done well when compared to the previous period. So overall pricing, the famous pricing ratio is price earning ratio. Price earning ratio is nothing but the total market cap divided by the total profit after tax earned by these companies. So the total, if you divide this total market capitalization of 5.476 trillion with that of the annualized net income, annualized profit after tax, which is 0.046 into 4, because this is 1 quarter revenue. So when you analyze it, you have to multiply it by 4. That if you divide this by this number, that is 5.46 divided by within bracket 0.044 into 4, close the bracket, that is 29.47%. The overall PE ratio for all this 1,663 companies is 29.47%. If anybody asks you what is the PE ratio of Indian stock market, the overall PE ratio, you can comfortably say it is 29.47x. But if you ask anybody, ask you what is the PE ratio of market index like Sensex or Nifty, you cannot say 29.47x, because index considers only free float market cap, whereas we have considered the overall market cap with that of the overall net income, annualized net income. So which comes to 29.47%. I would comfortably consider 29.47% as the PE of the entire Indian market for my own reason. Okay. Now let's go to the next slide. So graphically representing the entire data that we have discussed in the previous slide is the revenue have grown, total top line have grown in Q1, and even the total net income, profit after tax, total bottom line have also grown, but only by 5.45% when compared to 9.65% of the top line growth. This implies there is a drop in the margin. Okay, and the drop in the margin is 0.4%. Let's go to the next slide, which is very important. We have bit by bit, we have analyzed this and reviewed this results. In that, we found that out of this total 1,663 companies with minimum market cap of 1 lakh crore, which is considered to be very big, large cap companies, is just 1 or 3 companies out of this 1,663 companies, which is 6.2% of the total companies. And companies which have negative sales growth, somewhere around 407 companies out of this 1,663 companies, which is almost 25% of the total universe that we have considered. And the companies which have negative net income in Q1, negative net income, not net income growth, negative net income in Q1 is somewhere around 180 companies. So it means 180 companies, which is 10.8% of the total companies, have declared loss. Okay. And the next piece of information is falling net income margin. The companies which have reported fall in the net income margin is somewhere around 756 companies, which is almost 45.5% of the total universe, which is not a good sign. It is almost 50% of the companies have declared a fall in their operating, that is net income margin, net income margin, profit after tax margin. So which is not a good sign. Okay. And companies trading at an annualized PE between 0 to 15 is just 201 companies, which is 12% of the total universe. Which means, we generally believe that when the when the price earning ratio is trading below 20 or 15%, those companies are considered to be cheap. But that may not be the case. Companies which are trading at a low PE are deserve to trade at a low PE because of various reasons, fundamental reasons related to business and related to the way it is operated. So it is just general perception, which may not be true. Okay. And negative net income growth, companies which have negative PAT growth rate in Q1 is somewhere around 72 companies, which is just 4.3%. That's a very tolerable rate. Okay. When you see this graphically, the total number of companies, out of this total number of companies, very less number of companies are large cap companies, which is just 1 or 3 companies. And the alarming sign in this data, alarming insight in this data is the 756 companies which have declared a drop in their net income margin, which is a negative sign. Okay, let's go to the next slide. This is the pricing distribution table company-wise. Among the top 5 companies, this table means among the top 5 companies, it contributes somewhere around 15% of the total market cap. Top 10 companies contributes somewhere around 22.2%. And top 25 companies contribute somewhere around 35% of the total value, total price, not value, sorry. And top 50 companies is contributing somewhere around 48.5% of the total market price. So total market capitalization. So if you want to buy 50% of the Indian equities in general, if you are wealthy enough, you should be the world's #1 richest man to buy 50% of total Indian market. You have to contribute somewhere around out of this 5.47 trillion dollar. If you have $2.7 trillion, you can buy the top 50 companies of India listed in Indian Stock Exchange. Okay, so that is the meaning of it. So only 1,000 companies out of this 1,663 companies contribute 98%. So the value is concentrated on the top companies in Indian market. It's not widely spread. There is a wide gap between the top companies and the big companies and the small cap companies. That is the meaning of this table. So just 50 companies contribute 48.5% of the total market cap of Indian market. This is the insight that we can take. So next table, the previous table is represented graphically. Okay, this is the meaning of this is 1,000 companies contribute somewhere around so this is the market cap and this is the total number of companies. Okay, this previous table is represented graphically. And let's see the pricing distribution table industry wise. The top industry which contributes more value, more market capitalization is the computer, that is software and consulting. IT companies, IT consulting companies, not software companies, because they don't sell software like Microsoft or Google. TCS is not selling any software. They don't make anything like they don't own anything like Google or Microsoft Office or MS operating system or something like Amazon. Not Amazon. Something like Apple softwares, Google softwares, applications. They don't do anything. They just do IT consulting work. So those industries contributing somewhere around 8.69, that is 8.7% of the total market capitalization. Second comes the private sector bank, which is 7.3%. And refineries and marketing, oil refinery companies like Reliance, Indian Oil Corporation, something like that. It's Hindustan Oil, Bharat Petroleum Corporation. All these companies contribute somewhere around 5.63%. See, the most the physical asset-based companies like oil refineries, pharmaceutical companies are valued less than IT service companies, IT consulting and service companies. This is something very, very unlogical or irrational. You see, these software companies doesn't own any big physical assets like factories, land. So they just people, human resource based business. But those human resource based business, which doesn't have any intellectual properties like Apple have, like Google have, like Microsoft have. These are Indian IT and service companies doesn't own any intellectual properties. IPRs are not there, but still they are valued more in Indian stock market. Whereas physical asset-based business industries like refineries, pharmaceuticals, power generations, power plants are there. It's a physical asset you can touch and feel. Those companies are valued less when compared to software companies and software and IT consulting companies, which is something unique in Indian market. Which is, you know, uh, the IT companies, if you just go and liquidate those companies, what asset you will get? The liquidation value of all this IT and IT service companies are much lesser than the refinery industry companies, the power generation companies, the telecom companies, and all. But uh, that is the actual reality in the Indian market. Uh, so third is refineries, and fourth is pharmaceutical companies, and fifth, surprisingly, the pillar of Indian economy, the public sector banks, are contributing just 3.53%, 3.53%. And power generation, another pillar for Indian economy, is contributing 3.34%. Okay, so um, this is the industry-wise distribution of market capitalization. So we have grouped other industries which is not that big, which is contributing less than 1%. We have aggregated it, and this is not just one industry; it is various other industries. So this is the industry-wise distribution table. And next, this is graphically represented. And so by all this, what we can conclude on the overall pricing of the Indian stock market, whether it is overpriced or underpriced. I'm not saying overvalued or undervalued. We have carefully used the word price, overpriced or underpriced. With the total net income margin of all the top companies in Q1 June 2024 is down by 0.4% compared to Q1 June 2023. Definitely market is overpriced. Definitely market is overpriced, and you can see that in the PE ratio. PE ratio, if it is less than 15x, we consider that as an undervalued one. But even in that perspective, as it is 29.47x, the PE ratio, it is definitely overpriced. So does that mean that Indian market won't give a positive return in the coming months or in the coming quarters? We don't know, because when you see the macros that are happening in the Indian stock market with the continuous flow of money through mutual funds and through various institutional inflows, the market may go up irrespective of the fundamentals. See, in the real market, the fundamentals may converge with the pricing of the market, but not always. So the dynamics of the market depends upon the demand and supply. Here, the demand is more through mutual funds. A lot of money flowing into the market. It may go up, but that may be a trigger point which can pull down the market, which may or may not happen. So based on the fundamentals, definitely market is overpriced. If you go by the fundamentals, yes, market is overpriced. How this can be an underpriced market? If something happens, this can be an underpriced market. What are those, uh, you know, uh, various activity, various catalysts that can trigger this as an underpriced market? See, the growth rate and top and bottom line should be in the double digit. It should be more than, say, 15% or 20% growth in the top line, and the resultant should be affected in the bottom line. The bottom line should also grow at that rate, 15% or 20%, or more than 15% or 20%. And they should maintain the net income margin. Margin is very important. So for every 1 rupee, if they earn 15 rupees, 15 paise, for every 1 rupee, 15 paise, they should maintain that growth, that margin and the growth in the bottom line also. Only when these things are happening, the market may be an underpriced market. So will the top and bottom line of all this 1,660 plus companies, will it grow by, say, more than 15% or 20% in Q2, Q3, and Q4? We have to wait and watch. If there is a potential for that growth, the market can be fundamentally supported for this growth. Okay, so this is our conclusion. But as of now, based on these fundamentals, we believe that the market is overpriced, and you should be very cautious in making a substantial investment in the stock market. But I will not say that you should sell off all your stocks, investments, and get away from the market. You should always be invested in the market, whether it is underpriced market or overpriced market. You should always use the underpricing that may happen in future. In that case, if market reacts, market corrects, invest more in the fundamentally more stocks, increase your positions in fundamentally strong stocks, and stay invested for a very long period. So that will take care of your inflation, that will take care of your other happenings, and will give you a real rate of return, which will substantially beat all the returns of other asset classes. Equity, when selected correctly, fundamentally strong stocks, if you select in your portfolio, that will give an enormous growth, and it will beat all inflation and make you wealthier. So now we have seen the overall market pricing with respect to its fundamentals. Now let us go by industry wise. Today in this episode, we will see just one industry, which is two and three wheeler industry, Indian two and three wheeler industry. So this is the overall picture of the Indian two and three wheelers industry. There are 7 players. We have selected 7 companies, out of which in this table you can see the name of these companies and the total income in Q1 June 2024 and Q1 June 2023, and their growth rate and the net income, that is PAT, in June 2024 and June 2023, and their growth rate. And this is outstanding shares, which is nothing to do with the value or the fundamentals. So overall, the top line of the overall two and three wheeler industry, Indian industry, have grown by almost 15%. That is 14.9% exactly. Okay. And the net income have grown by 17.73%, which is a very good sign. See, when the growth rate in net income is more than the growth rate in the total income, that is bottom line and top line, if this thing is more, then that's a good sign. They have improved their margin from 10.71% to 10.45% to 10.71%. You have to see from right to left, okay? Because this is the previous quarter and this is the current quarter. So the margin have improved. The net income margin have improved by 0.26%, which is a good sign, okay? And if you see the growth rate, except in the last company, all the growth rates are in the green or in the positive zone. Only one company among these 7 companies, the top line and the bottom line is negative. That is for Ola Electric Mobility Limited, which is the recently listed stocks. And being in the electrical mobility sector as a subsector, they are yet to make profit, and they have declared increase in their net loss. The only company which have declared net loss is this company, Ola Electric. So we have to wait for another 2 or 3 quarters whether they are improving their bottom line, whether they are turning into a net profit company. We have to wait and watch. We, being a small, new company, it's a new company which is in operation for last few years, maybe in 2-3 years. I don't know the exact details about it. I have to check. And yet to prove their business model in the market. So we have to wait and watch for this Ola electric mobility in the next 2 or 3 quarters. Until then, we consider that as the worst perform. So let's see what is their market pricing. So, so the total market cap of all the 7 companies put together is somewhere around 7,37,922 crore. Here we have listed this, we have shown this as million. So when you convert this, you have to divide it by 10. Okay. So it is 7,37,922 crore as on 30th August 2024. Okay. And the top contributor for this is Bajaj Auto, which is 41% of the total value. And Eicher Motors comes next, and followed by TVS Motors, and the fourth is the Hero MotoCorp. So these are the top four contributors or top four players of Indian two-wheeler and three-wheeler industry. Okay. Now, except if you see the net income margin growth, I think each of motors have done well. So the best performer in this whole lot is, of course, Bajaj Auto. And I can also say Eicher Motors because they have declared both sales growth as well as the improvement in their margins. And Eicher Motor is, having a better margin than any other players in the whole lot. It is 23.6% net income margin. Whereas top player, even the top player, or Bajaj Auto, have declared only 15.8% or more than 15%. And only Eicher Motor have declared more than 20% net income margin. So in terms of performance, in terms of fundamentals, best performer is Bajaj Auto, as well as I would say even Eicher Motors have done well. Bajaj Auto and Eicher Motors are the best performers. And who are the worst performer? Here, I would say Ola Electric Mobility is the worst performer. And so overvalued stock as well. And even I consider TVS Motors is also overvalued in terms of P ratio because having a very less margin, I think they are one of the company which is having a very less margin compared to the top four players. Being one of the top four, still their operating margin, that is the net income margin, is very less than 5%, 4.6 and 4.8. And they're trading at somewhere around 68.9x PE. So I would consider overvalued stock as one is Ola Electric Mobility, and the other one is TVS Motors Company Limited. And if you ask me, based on the PE ratio, which was the most undervalued stock in the entire lot, I would say it is Eicher Motors having a good operating margin of more than, good net income margin of more than 20%. They're still trading at 30.8x, and compared to the industry PE of 43.51x. So the most undervalued stock is Eicher Motors, followed by Hero MotoCorp, which is again trading less than 30x, which is around 26.4x. So I would consider safely that undervalued stock in the whole lot of this industry is Eicher Motors one, and the second one is Hero MotoCorp. So this is based on the annualized net income calculated P. Okay, the P, this is 1 year forward P based on the annualized net income. So this approach of selecting stocks is called top-down approach. From the market, we filter it down to industry. From industry, we filter it down to an individual stocks. So this approach is called top-down approach. And in this top-down approach, in two and three-wheeler Indian industry, we believe Eicher Motors and Hero MotoCorp is undervalued. We are in the subsequent episodes of top and bottom line series, we will discuss each and every top industries that we have listed in this slide. Hope you gain some insights, valuable insights through this video. And if you like it, please suggest this to your, share this to your friends and neighbors. See you in the next part. Thank you for your time.